Buying a home is exciting, but it can also be overwhelming. After helping more than 500 families move into their dream homes, I've seen just about every mistake home buyers can make. And the good news, all of them can be avoided. In this video, I'm going to walk you through 10 common mistakes that could cost you thousands of dollars and share with you how to sidestep them with confidence, clarity, and guidance to help you stay on track. There's an old saying, don't shop with your heart until you've checked with your wallet. Before you start house hunting, it's essential to get pre-approved, not just pre-qualified. Pre-approval means a lender has reviewed your credit report, your income and assets, and then an underwriter has given their stamp of approval. That means that once you find your home, you're not just guessing, you're good to go. And just because the lender says you can buy up to a certain price point, that doesn't mean you have to. If the payment at that price point feels uncomfortable, choose to look at lower priced homes with their lower monthly payment. High credit card balances don't just affect your credit score, they also impact how much home you qualify for. Lenders look closely at your debt to income ratio, which is just your total monthly minimum debt payments as a percentage of your monthly income. And even if you don't carry a balance on a card or if you pay it off every month, the lender will still apply a minimum payment for that card, usually around $25. This applies to store cards as well. So keeping those balances low, ideally under 30% of the available credit on each card, can make a huge difference. And if you have a lot of store cards that you don't use, talk with your mortgage specialist before closing any of them, as that can also impact your score. Lenders will also look at what your total monthly expenses will be with your new house payment included as well. So the lower your credit card minimum payments, the more home you can qualify for if you choose. Here's a pro tip. If a high balances are lowering your credit score and you can't reduce them without dipping into your down payment funds, consider asking the card issuers to increase your credit limits. This can lower your overall credit usage percentage, which is the amount of credit used relative to the total available credit, and that can help to increase your score. And remember, the key here is to avoid using that new credit because you're getting it to improve your score, not to buy new stuff. Lenders do have minimum credit score requirements, but once you're past that, there are also tiers within the credit scores that usually affects the cost of your rate and not whether you can buy. The most common tiers are 580 to 619, 620 to 679, 680 to 719, 720 to 759, 760 and above. So while a 580 credit score might be enough to qualify, moving up to the next tier can often unlock better pricing and additional loan options. But here's the reality. Most buyers won't jump multiple tiers very quickly. It's really rare for someone to go from, say, 590 up to 680 in a short period. So rather than stressing over every few points, focus on paying bills on time, lowering revolving debt, and avoiding opening new credit accounts. And then over time, as your score continues to improve, you can always refinance into a better loan program or a lower rate. If you buy a car, finance new furniture, open a store credit card, or put items on layaway, or even if you co-sign for someone else's loan, that's considered new debt and can push your debt ratios over the limit and reduce your credit score. That can cause you to be denied just as you're crossing the finish line. See, the ratios again are the total monthly debt, which is the total of your minimum required monthly payments divided by your total monthly income. Now, the acceptable debt ratio can vary by loan program and by mortgage company, but most want you to be under 50% total debt, and that includes the new house payment. A friend of mine was helping a young family buy their first home. Everything was going great. They got approved for their mortgage, and after signing their ownership documents, they were so excited they raced over to a furniture store that was having a big sale. And that's where things blew up because the mortgage company always reruns credit and re-verifies employment before releasing funds and allowing the mortgage to record. So their monthly debt went up, their credit score went down, and suddenly they no longer qualified for the mortgage. It was a disaster. They'd already given notice on their apartment, which meant that they had to scramble to get a short term rental and put all of their things into storage while waiting or trying to get this whole situation unwound, which took over a month to get everything back on track. So, pro tip, just because you sign papers doesn't mean you own the house yet. Wait to buy anything on credit until after the keys are in your hands. And remember, furniture stores are always having another sale, so don't panic or stress about that. Real quick, if you're receiving value from this video, please do me a favor and hit that like button and subscribe to the channel because it really does help more people find this information. And the next video could be the one that is the key to your whole home buying experience. Thanks in advance. I really do appreciate it. Not all lenders are created equal. Some will be able to offer specialty program while others may specialize in government-backed loan programs like FHA, VA, Fannie Mae, and Freddie Mac. They can all have different rate options and fee structures, even on the same type of loan. Some lenders may advertise super low rates, but charge you thousands in fees in order for you to get them, while others may advertise slightly higher rates, but with little or no upfront costs. So, in addition to comparing interest rates, you should also look at the total cost of the loan. Also, the lowest rate doesn't always mean the best fit. Ask the lender for references who can share with you how well that lender communicated with them, how often they received updates, and whether or not their transaction went smoothly. A lender who communicates clearly, meets deadlines, and works closely with your realtor can make your entire transaction smoother, faster, and far less stressful. You'll know your lender is good because they won't just quote numbers to you. They'll explain your options, walk you through the costs, and help you choose the program that best supports your goals. When you work with an experienced realtor and a trusted lender who collaborates as a team, it makes your home buying journey smoother, faster, and far less stressful. And if you need a local realtor but aren't sure who to turn to, please fill out the form in the comment section below, and we can connect you with a reliable professional in your area. It's completely natural to want to have some options before submitting an offer. After all, buying a home is a big decision. But here's the reality: the longer you spend searching for what else might be out there, the more likely you are to lose the home that's right for you. I've seen it happen many times. A home buyer finds a home that checks all the boxes, but instead of acting, they decide to look around just a little bit more. By the time they circle back, that home's under contract. And suddenly, every other home they look at now feels like it's a compromise. It's not about rushing or settling, it's about recognizing the right home when you find it. Whether it's the first home you've seen or the 10th, if it meets your needs and feels right in your gut, then that's a sign that you found something special. Trust your instincts, stay focused on your goals, and don't let indecision cost you the perfect home. Move forward with confidence. When looking at new homes, it's important you understand that model homes are designed to make you fall in love, and they're very good at it. Every detail is perfectly planned: upgraded flooring, designer lighting, furniture that makes the rooms look huge. But here's the reality: what you see in the model isn't what comes standard. I've seen buyers assume the features they see, like pendant lights, backyard landscaping, cabinet hardware, are included, only to be shocked later by the cost of those extras. So when you tour a model, don't get distracted by the decor. Instead, focus on the space, the layout, and the flow of the home. Ask yourself how the rooms connect, where your furniture would go, and whether the design fits your lifestyle, because that's what you're actually buying: the structure, the floor plan, and the ability to make it your own over time. Remember, the model home is there to sell houses, not to show you the exact house that you'll get. When most buyers think about what they can afford, they focus on the down payment and the monthly mortgage payment. But the reality is, those aren't the only costs of home ownership. That brand new home might not include backyard landscaping, washer dryer, or even a refrigerator. Or the resale home may need to have the cabinetry finished, or the countertops updated, or need new flooring. And it's easy to underestimate how much those finishing touches can cost. You don't need to buy everything all at once, of course, but you do need to plan for it. Setting aside a home buffer fund for those early expenses, as well as the unexpected ones that follow, like air conditioning tune ups, sprinkler repairs, or higher than expected power bills, helps you stay comfortable and confident after you move in. Also, remember that owning a home means maintaining it too. Even new homes require upkeep, things like sealing grout, cleaning filters, servicing your heating and cooling systems, and ongoing yard care. Small investments in regular maintenance can prevent much bigger repair costs later. Once you understand the real costs of home ownership, you'll make better decisions, not just about which home to buy, but how to enjoy it without financial stress. One of the biggest mistakes home buyers make, especially when purchasing new construction, is thinking that they're going to save money by going it alone. I get it, it sounds logical. You see a model home, the sales agent seems super nice, and you think, why not just work with them directly and negotiate a discount because the builder won't have to pay a realtor commission? Here's what most buyers don't realize, and that is that the builder's sales agent works for the builder, not for you. Their job is to sell homes and to protect the builder's interests. They're not your friend. They're not going to be there to advise you on what's best for your particular situation. Also, builders budget for a percentage of sales to involve a realtor, but not every one. So if you're not a licensed realtor, you're not going to receive that commission, even in the form of a discount. The builder simply keeps it as additional profit. Oh, and having your own realtor usually costs you nothing. The builder almost always pays our fee. But what it does is it gives you something incredibly valuable, and that is representation. That means someone in your corner reviewing the contract, watching deadlines, protecting your deposit, and most importantly, helping you negotiate incentives that you might not even know are available. For the builder, gives them someone they can go to help move the purchase along when things might bog down a little bit. Someone who understands the process and helps keep communication lines open and smooth on both sides. And it's not just with builders. And it's not just with the builders. Even in resale transactions, working directly with the listing agent or allowing one agent to represent both sides can leave you at a disadvantage. When an agent represents both the buyer and the seller, that's called dual representation or dual agency. And while it's legal in most states, it's fraught with peril. And that's because that agent can't disclose confidential information or conversations. For example, let's say the seller tells their agent, I'm willing to accept $10,000 below asking price. Well, you then come in and approach that same agent and say, we'll work with you so you can get us a better deal. If that agent were to share the seller's $10,000 flexibility, they will have violated real estate law and could face civil liability and even lose their real estate license. So, how can you ever be truly sure or trust that you're getting the best deal or that they're representing you to the best of your ability? In short, when you share an agent, you lose your advocate. Whether you're buying new or resale, you deserve someone whose only job is to look out for you, to guide you through the process, explain your options, and help you make confident, informed decisions. So please don't go it alone. Having a trusted realtor by your side can make all the difference in your home buying journey. A home inspection is when an independent third party goes out and takes a look at the home that you're planning to purchase, that you've entered into a contract on. A home inspector is not a party to the contract, so they are an independent third party, meaning that they are not selling you the home, they're not buying the home with you. It is strictly, a contractor that you're hiring to let you know if the home is in good shape. Okay. Now, when they do the inspection, it's going to be a visual inspection, meaning that they cannot open up the walls or the ceiling. They cannot look under the flooring, pull the carpet up or lift up tiles to see what's happening underneath. It's strictly what they can see. Now, they do have equipment that they can use to help them see behind the walls in a sense, with things like a thermal imaging camera, which lets them see, variations in the temperatures of the walls, which can be an indicator of a leak that is occurring. Okay? But they cannot open the walls to verify that. So when they present their report to you, you're going to have a recommendation from the inspector as to what needs to be repaired and or replaced within the home that you're looking at. On the outside of the home, they're going to take a look at the materials that are used for the exterior. That's going to be the stucco on the body of the home, or brickwork, or siding, depending upon what part of the country you're in. On the roof, they'll take a look at the roof tiles or shingles, again, depending upon the material, and they're going to look for things like missing tiles or cracked tiles, missing shingles. If there are weak spots in the roof when they're walking on it, which can be an indicator of the need for a new roof, for replacement of the underlayment of the roof, the boards that the shingles and the tiles sit on, so that you're going to know if it's going to be a large expense or a small expense. On the inside of the home, they're going to plug a voltage meter into every outlet and make sure that power is flowing and that it's flowing at the proper voltage. They're also going to turn on the air conditioning and the furnace and make sure that the air blowing out of the register is blowing out at a proper temperature to cool or heat your home as it's supposed to. They're going to turn on all the faucets and make sure that water is flowing and at the proper rate. They're going to see if it's draining properly as well. They will use their thermal imager, and hopefully they're pointing it at all of the ducts and also at the walls around the sinks, as well as under the cabinets, inside the cabinets underneath the sinks, to see if there's any fluctuations in temperature or things that might show up on infrared, uh, to indicate whether there is a leak. They're going to look at the cabinets themselves and see if there's any water damage that's occurred, which can be an indicator of a past leak. Once they get through their inspection of the home, they're going to provide you with a report which tells you all of the things that they found in the home. Now, in my experience, I have never seen a report come back with nothing in it. The inspector always finds something. And that is not to say that that means that it's a bad home or that you shouldn't purchase it. It's simply telling you what they've seen, and then you'll make the decision from there whether to move forward or not move forward. If you have a realtor, they will guide and advise you based on their experience, as to whether there's so much that needs to be done that this may not be a home that's worth purchasing, and perhaps you should continue looking. Or they may tell you that these are normal things and they're not a big deal, and you're going to maybe have some minor expenses in the near term. You can also ask the seller of the property to make repairs based on that report, um, provided that it's something that's reasonable. And the seller can either say yes or no, or they can offer you a credit wherein you'll have it fixed at your expense later, and they're going to give you some extra money towards closing costs or take some money off of the purchase price of the home. Again, how it's structured is between you and the seller, and if you have a realtor, the realtor who will be advising you. If you and the seller cannot come to an agreement on making repairs or receiving compensation for repairs that you're going to have to make after completing the purchase, you may decide not to move forward with the home. It's super important that you realize that the home inspection is your choice. It's not something that the seller is obligated to reimburse you for in the event you decide not to move forward with buying the home. So, essentially what it is an insurance policy that's going to be designed to let you know the condition of the home as well as, what your future costs could be, which could be very significant in the event that they find, major damage to the home and will save you money or save you from purchasing a home that's going to cost you even more than what you had intended. So, skipping this step is something that I would never recommend because it is something that is there for your protection. Now, if it's brand new construction, I don't necessarily know that it's necessary to have an inspection prior to close of escrow. You're going to have multiple inspections that have been done by not only the builder but by the city and or county that are done during the course of the construction of the home, which are there to provide you with protection. When you do your walkthrough, which is where the builder takes you through and shows you, how the home uh, works. They explain to you how everything functions and operates, and while you're doing that, you're going to be looking to see if there's anything that requires any touch up or repairs. Um, the home is going to have a 1 year warranty on it, and so minimum. And so, I typically recommend that you wait until the 10th or the 11th month after closing escrow to have an inspection done and then provide that to the builder to have any repairs done that the inspector recommends, and the builder will take care of those things as part of their 1 year confirmation on the warranty. That's going to be a time when they're going to go through and you should expect there's going to be settling of the home, which can lead to cracking of drywall, cracking of grout. They're not going to repair dings in the walls that were caused um, by your use of the home, whether it be when the movers moved you in and they hit a wall, or your kids put a hole in something. That's not part of the warranty. It's going to be things that occurred during the construction. So just be aware of that, and then make the decision based on what you like. I've certainly had people say, "No, I want to get my." If you're buying new construction, I don't necessarily know that it makes sense to spend the money on a home inspection because they're going to be very limited in what they can inspect. It's strictly a visual inspection, but the builders, because of their insurance requirements, will now not allow an inspector to go up on the roof or go into the attic because if they slip and fall, the builder would be liable for medical if they took a wrong step in the attic and fell through the roof. Not only would they be liable for that, but also for any damage that occurred that they would have to make repairs on. So they're not going to allow the inspector, full access or the same access as they would have with a resale home. So that's something to be aware of. Also, the builder is providing you with a 1 year warranty on the overall home itself, which over the course of the first year, you're going to find that with a new home, there's going to be things that are going to occur as the home settles. You're going to find cracking of the drywall. You're going to find cracking of grout. These are things that are covered under the builder's warranty, and the builder will typically have a 1 year walkthrough with you to go through and make note of those things, and then they'll schedule a repair crew to come out and make sure that everything is taken care of for you. I'm not sure if I said this before, but while the home is being built, the builder is going to have their superintendent inspecting the workmanship of the contractors that are actually doing the construction on your home. After they've done the inspections, the city is going to send an inspector, or the county, depending upon where you live, to inspect the home as well and make sure that the contractors use the proper number of nails in the nailing up the drywall or the framing. They're going to make sure that they're using the proper gauge of wiring, that the breakers are working properly, that the plumbing is working properly. So there are a number of eyes that are on the home while it's being built, and they might have 25 or 35 inspections during the the construction process of the home. So you have some protections there in that process. So you want to be aware of that and make the decision as to whether you want to invest 350, 400, $500 for a home inspection to be done on things that are already being inspected for free. Okay, so just be aware of that. It's also important to understand that when a home is brand new, it needs to settle. Okay. And what that means is that, everything has been put on basically blank ground. The earth has been compacted to an engineer's specifications, but you're adding a bunch of weight, whether it be a concrete foundation or subfloor, or they've dug a basement into that, and then added all the framing, the roofing, and with all of that, the earth is always shifting, and over time, the short term, it can develop cracking in the drywall or the grout. The framing will expand and contract based on the moisture content of the air around it, and that can lead to cracking of the drywall or bows in the wall. And then, when the season changes, those things may go away. It doesn't happen for an extremely long period of time. Typically, the home is settled in within the first year. And that's why the builder's warranties are typically 1 year on the interior. And then you also have a 10-year structural warranty. So, about the 11th month after close of escrow, the builders will call you up and have a representative go out and walk through your home with you. And they're going to make note of any cracking, that needs to be repaired. That doesn't mean you have to wait until the 1 year is up. You can call for, major issues, like let's say the walls have separated from the ceiling. The ceiling has popped up and there's a crack up there, which, in most cases, the structure is designed to do that if there is quite a bit of settling to ensure that there's not significant damage to the structure of the house, and they will make those repairs sooner. But typically, they only go in and repair cracks in the drywall and the grout one time. So wait on those things until the 11-month inspection, and then have the builder take care of those items. Also know that they are not going to repair damage to the home that you have caused. So if your movers, when they were moving you in, dinged a wall, put a hole in a door, that's not something that the builder will be responsible to repair or correct. That is going to be something that is between you and the moving company, or if your kids did it, for you to repair yourself. So be aware of that. Typically, I recommend having the home inspection done at the 11th month before the builder representative comes out, so that you can provide them with the inspector's report, and they can use that as a foundation for scheduling any repairs that need to be made, which then they'll get those taken care of before that 1 year warranty has expired. Thanks for watching this video. If you haven't already, I'd really appreciate it if you would tap that like button and subscribe to my channel. As a thank you, click on the link in the description to get my free home tour worksheet designed for use when touring homes to help clarify your opinions and thoughts on a home and easily keep track of which ones you loved and which ones you didn't. You can also click on the link to check out my video, What to Look For When Touring a Home. Thank you so much, and I look forward to seeing you at the next video.